Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about my own stocks portfolio and update you on my positions, the return of the portfolio, and a few changes to this portfolio during the last months, or I should say during the last 2 weeks. If you remember, just 2 months ago, this portfolio was down 16% from the highs in January 2022 to the bottom in June 2022. And its dollar value was around $50,000. Now the markets have been rebounded and I'm only down 4% year to date, and the dollar value of this portfolio is around $58,000. Imagine if I panic sold the stocks when they were down 2 months ago because some of the experts called for the biggest upcoming recession in the history of mankind. Instead, I continue to hold the stocks I had and bought more shares at lower prices to bring my average cost down because I believed in the quality and value of the companies that I own in my portfolio. This is exactly why you should not care about short-term performance of your stocks and should only focus on long-term returns. In this channel, I don't tell you what stocks to buy because I don't know about your investment goals, your risk tolerance, and your financial situation. But I will tell you what I am doing with my own money. And I show you the process of basically evaluating different companies and the process of long-term investing. So if you like my story and like to see the process of long-term investing here, make sure to subscribe and hit the like button so this video can reach a wider audience. While the short-term performance doesn't really matter, I always like to compare the performance of my portfolio with S&P 500 as the average return of the US market in the long term. And my goal is to be able to beat this index in terms of the return by a good margin over the next 10 years. I used pretty much all of my investments in 2020 to buy a house and therefore started this new portfolio in January 2021 and slowly dollar cost average into the stocks that I found them undervalued or fairly valued but with a great quality. I try to update you every 2 weeks with full transparency and show you the exact performance of my portfolio and also my wife's portfolio, which we consider them a grand portfolio. So yeah, I first just want to start with the asset allocation. And as you can see here, most of our net worth, I mean me and my wife, is in real estate at the moment. And this is the house that we bought recently. Next, we have stocks, which I divide them geographically into Canadian stocks and US stocks. And I have a small stake in crypto as well. This is the Excel sheet that I use to track my personal investment and also my wife's investments as one grand portfolio. And as you can see, we finally see a few greens in this portfolio after a few months of red in pretty much all the positions. The important metrics here are the total return of the grand portfolio, which is 0.26% in the green from January 2021 to date. So we are finally in the green. The portfolio annual dividend is close to $1,312 per year, which is totally tax-free as all of our dividend stocks are inside TFSA. And the yield of portfolio is around 1.82%. This is a nice graphical representation of the stocks that we hold in this grand portfolio. The majority of these stocks are tech and financial stocks mixed with some REITs and consumer discretionary stocks. As you can see, I tried to balance this portfolio in the last few months by adding to my smaller positions. This is where I track the returns of our grand portfolio against S&P 500 and also our initial deposits. As you can see, we consistently deposit cash and buy stocks in these portfolios, and fortunately the performance of our portfolio was better than S&P 500 so far, and it is mainly due to good performance of Canadian stocks and of course Google. It is interesting to see that in both bull markets and bear markets, this portfolio is pretty much performed better than S&P 500, which is something I'm really happy to see here. Okay, now let's look at my personal Wealthsimple account, excluding my wife holdings in her own portfolio. Overall, I have close to 58,200 Canadian dollar worth of stocks in this account at the moment. My TFSA, which is mostly Canadian companies and Google, performed very well actually, and it is up 8.56%, which is a great performance in my opinion. I analyzed pretty much all of these stocks before on this channel, and I will leave a link to those videos in the description box below. In the US side of my TFSA, Google is the only position I hold, and as you can see, I currently own 50 shares of Google in my TFSA. Google is one of my best performers so far, and it is up 35%, which is an absolutely amazing performance, even considering the recent market correction. My plan for Google is to just hold it. I'm not going to add to Google, and I don't have any plan to sell my Google shares anytime soon. On the Canadian side of the account, I didn't have a major change, but I bought the dip on most of my holdings in the last 2 weeks using the dividends I received from TD and Power Corporation and also a small deposit that I made. Here we have Aritzia, which is a growth-focused Canadian fashion stocks, and I am up over 4% on this position at the moment. I bought 15 new shares of Aritzia recently, and now I own 75 shares in my TFSA. I want to increase my ownership in Aritzia, and my goal is to buy another 25 shares to have basically 100 shares of Aritzia inside my TFSA. The next position is Brookfield Asset Management. It is basically flat and I'm down only 2% on this position at the moment. I don't have any plan to buy more shares of Brookfield at this point, and as I'm basically happy with the number of shares I own. The next two positions are Bank of Nova Scotia and EQ Bank, which are both amazing Canadian banks. I am down 7 and 12% on these two positions respectively. I'm actually thinking about buying more shares of EQ Bank as it is extremely undervalued in my opinion. Regarding Bank of Nova Scotia, I don't have any plan to sell my shares at least for the next, I would say 10 years. I will just try to add to my shares during these dips. Next, I have two REITs, Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US and Europe, and Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both basically growth potential and consistent monthly dividends. I am down 8 and 9% on these two positions, and I bought a few more shares of Killam and also Granite in the past 2 weeks to bring my average cost down. Next, I have Power Corporation of Canada, which is mainly an insurance business with a strong balance sheet and consistent dividend increases. They reported a relatively bad earnings recently, and I am down 7% on this position so far. I like to own 200 shares of Power Corporation, so I still should add a lot more shares to this position. Finally, we have TD Bank, which is up 2.75%. TD is also one of the positions that I will probably never sell it and just try to collect those dividends and reinvest that cash flow into my other stocks. Next, let's look at my Rrsp. I plan to hold most of my US stocks here. Rrsp Portfolio is down only 3.9% and it is close to become also green basically. My biggest investment here so far is Meta Platforms or Facebook, which is down 39% with a terrible performance, but I am absolutely sure that Meta will rebound in the future as it is undervalued here. Other positions are all in the green by a good margin. Amazon is up 27%, PayPal is up 23%, and Google is up 7.9%. Unfortunately, my Amazon and PayPal positions are small and I didn't have enough time to build a much larger positions in these two companies. If for any reason we see another downturn in the markets, I will definitely pick up more Amazon and PayPal shares. So overall, my plan with all these stocks that I show you here is to hold or add to them during these dips. I did not sell any of these stocks during the recent market downturn, and even if we go down another 30%, I will still hold these stocks as I analyze each and every stock I buy, and therefore I'm not going to emotionally react to the price actions of these companies. These are my assets and I know the value of my assets, so I'm not going to sell them for low offers out there. There you are guys. I hope you enjoyed the video and my transparency in showing you all the positions that I have in my own portfolio and also the performance of my stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching and I see you in the next video. Farewell.